Hey, aloha everybody. This is Dennis with the Active Trend Traders. I want to welcome you to today's session of how to make money trading stocks, options, and ETFs. We take a serious look at how to clarify, simplify so that we can all multiply our accounts moving forward. Got some really interesting things that have been happening in the market this week. If you're joining us on YouTube or our Facebook, we want to welcome you. And if you want to leave a comment, please do. And please feel free to share this free content with anybody you would like. That would be awesome, and we would appreciate that. So let's get going to the rest of the story. Hi, everyone. This is Dennis. Encourage you to stick around to the end of today's video. At the end, we'll show you how to become a premium member and save 20% off the regular price. Thanks, mahalo. So joining us today on today's session is my son, Brandon. Brandon, how are you today?
I'm doing well. How are you?
Okay. I'm doing well, son, as usual. And so, again, this is Dennis Wilborn. I want to welcome you to the How to Make Money Trading Stocks, Options, and ETFs. We do this webinar every Friday. And we take about 15 minutes to see how the market's doing and see if things setting up going into next week. Just share some insight about what we're seeing and doing. I want to remind everybody that all the materials we do present are for trading purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. If you want to share anything with me, please share that via the chat board, and that way I'll get that and have a recording of it later on, which is really awesome. So I want to remind everybody that we are really focused on basically one thing: learn to focus on the process. The profits will follow without a doubt. Oftentimes I see many traders, they're focusing on a strategy, or they're focusing on just, I'm going to make so much money trading stocks in the market, that they don't have a clue what's really needed with regarding a system. And so and I'm not talking to you guys because you're tuned in, and we talk about the active trend trading system, which has been very profitable over the last multiple years, going back to when we launched originally in 2012. Our objective for today's session is basically timely, actionable intel review at the end of the week, seeking to clarify, simplify market decisions so wealth can be multiplied. That clarify, simplify, that and multiply has been our model at Active Trend Trading for since our inception. That's what we're about. That's what we want to be launching. And so we're very pleased with that. I will do a real quick market review. What's going on? Right now the market is very, news-driven. We're seeing volatile earnings. If you were watching Netflix and comparing that to IBM, basically the entities reacted very strongly in both directions. But then we see Microsoft today. Microsoft not much of a reaction. It didn't go much of anywhere. But of course, Microsoft never goes much of anywhere anyway, so that's okay. I think as far as the indexes themselves, especially the IWM, the Russell, is waiting for the Fed. If the Fed lowers rates, which it's like 95% expectation that the Fed's going to lower rates, then the market will probably continue to move higher. I think it's somewhat already priced in that the Fed is going to raise rates at least once, or even maybe 2 times before the end of the year. So if the Fed doesn't follow through on that, we could be anticipating and expecting a market to say, kind of sell off because of that. So we'll be taking a look at that. Here's where we're sitting as of at about 9 o'clock this morning. Everything is up. We are basically continuing to plug away with our active trend trading system. Boeing came through with us, came through just huge this morning or last night, when it basically jumped up because of expectations basically some shift in some spending, military spending, and all that type of stuff. And as you see, and let me get this up real quick if I can find it. There we go. Just go to this Boeing, Microsoft, lead to Dow, CrowdStrike. Great place to go take a look at what's going on and why, which is, of course, the Investors Business Daily section. And they're talking about why Boeing was basically jumping up nicely. One of the big reasons is because of this right here. Its grounded 737 fleet is expected to be back in service by the fourth quarter. And why is that important? Because a lot of times the companies that fly these 737s, they lease them or they rent them from Boeing. And if they're not airborne and flying, then Boeing's not receiving any revenue off those aircraft. And so that could be a big thing going into the end of the year. Boeing has earnings next week on the 24th. They report before the market opens. And so if you're planning any type of earnings trades, you want to watch out for making sure that you've closed everything out. If you want to close the trade by the close of market on the 23rd. So that's what's going on with that. Let's take a real quick look at the indexes, and we'll take a look at a couple of stocks. So Brandon, if you see anything you want to jump in on, please do. Here's the weekly on the, this is for the SPY. As you can see, we've talked about this expanding megaphone type top that's going on. S&P pushed to new highs this week, but it's not at the absolute tip top of the megaphone top. Next week, the megaphone top price moves up to about 303, 304. But everything is in gear to the upside. We have no reversal signals. We do have a little bit of negative divergence here going on the weekly TSI. We pop on over to the daily TSI. What's it doing? It's doing something. Actually, we had a nice little flag down to the 20. It rebounded off of that, but not a lot of follow through with that first move up. So we'll see what, again, the indexes could be waiting to see what's going to take place with the Fed. So that's where that's what we have going on this. The Qs. Daily chart again, the Qs came down and did bounce off the breakout level of 191.32. However, we're right there, didn't quite get it back up to all the way back up to the high from last week, and we gapped open and then kind of sold off. And so we'll see, what transpires through the rest of the day. And if next week is going to be kind of a squishy kind of week. Remember, today is monthly option expiration day, and normally it has slightly a bullish bias. IWM. Okay, the good side about let's get it set in. Okay, the positive thing about IWM and the Russell is that it is holding above the 50 and the 34-day moving average. It appears like it wants to turn and move up. Of course, it does have it's kind of like in a triangle type formation. It's got to break out of this downtrend line. It's got to break that level of resistance there, about 158, to get up to 161. But as we can see, it is the lagger. It is way behind the other indexes because the other indexes have already gone up and hit last year's high. The Russell has not done that yet. We need, but it is holding. It's holding right here. The expectation with the Russell is that if the Fed does lower rates, then that should be a catalyst for the Russell to move higher, because the small caps tend to do well when they're in a low interest environment. We'll see if that still continues to hold forth moving forward. At this point, we've got a little bit of a hanging man on the weekly chart that happened 2 weeks ago. However, we have not broken down below this stronger level of support. And we'll see what happens going into, we may get a deeper pullback. And if that's the case, then we'll be standing by and waiting for that. So, Brandon, you got anything on any of the indexes that you would like to?
Nothing that you haven't covered.
Okay, cool. Then what I'll do is I want to cover two entities real quick. Now, three entities. One, just to give a flavor for what happens when IBM. This is what the IBM reported earnings 2 days ago, and it rebounded nicely and moved higher out of that. So that's what it looks like, so that's a nice reaction to the upside. The interesting thing about it is that it's still not, it hasn't moved 10% outside of its projected move from where it closed on the 17th before it reported. And then we get a nice bounce up. We'll see if it continues to continue to move up. It would make sense, it's getting extended, that we should get some kind of a pullback back into the breakout area, which is about at 147. Secondly, this is what happens when earnings disappoint. Netflix was taken out behind the woodshed and whooped up on a little bit after it failed and broke down after earnings, gapped way down. It does have a strong level of support down here at the 314 level. We'll see if that holds. The way I'm going to look at Netflix right now is that it is a short, but it's got to get back up into the moving average before we can actually short it. Flip over to the weekly chart on Netflix, and as you can see, that is that's the largest amount of selling in Netflix going back, gosh, anywhere on this chart. So from a weekly standpoint, that's very negative. We were working off of a negative divergence on the TSI on a weekly chart, so that's what's going on there. A couple of entities that I want us to take a look at. CBR. CBR, what is it doing? It is continuing to push higher. It has earnings coming up on, no, this is a trade we did a couple of weeks ago, or basically just closed out on this Monday and Tuesday for a really nice profit on a debit spread, but it has earnings coming up on 8.7. As you can see, it is broken out of this pattern, little triangle pattern. What are we looking at? Where is it going from here? It has reached its 1618 extension, and it's running into hard resistance right there. And how do we get that 1618 extension? That basically is just an extension of this last downside move. And so it hit all the targets. What I'll be looking for on cyber, and if you are a free member of Active Trend Trade, look for a pullback back into the 20 to 34, and just wait for it. Wait for it to do that. Do that. Is it going to do it before earnings? Don't know. Just absolutely don't know. Cyber, talked about that. It was really interesting. Got a really was chatting with one of our members, and we've been doing a lot. Well, we'll get to that slide here shortly. So that's what I'm looking at right now, guys. A couple of entities that we did get into this week. Boeing, again, we are already in this. Boeing, this is on a daily chart. It was really hanging in there, starting to turn up, has earnings coming up on the 24th. And it's just about up at resistance. And we'll see if we're going to take some profit off the table on Boeing going out into the end of the day. So that's where we're at with that. Let's get back over to the slides. One of the very successful strategy we've been using is the revised strategy number 2, which is an option strategy where we focus on strategic compounding. Here's where it's as of close, as of right now in the market, we're up about 150% for the year on this. My objective on this is to basically generate 5% per week to let it compound. And so that's why it's a strategic compounding. Next week, we're looking at, we're up $15,000 on a $10,000 account. And then strategy number 2, our 5% growth target for next week is $1,253. And some weeks we make it, some weeks we don't, some weeks we go over, make more than that. And so that's what we're looking at happening going forward, especially when we get in, as we get into earnings. But speaking of, as you can see, Einstein is much better looking now. Brandon, you have been doing the strategy number 2 for small accounts. Can you just kind of share what's been going on with that?
Sure. I thought as we started to talk about this concept of strategic compounding, I thought, let's try an experiment. Let's start with a small account and just see what we can do with this, trying to meet that strategic goal. So I started in the middle of May, started with $2,600, and just, short story is the cash balance in that is $4,000 as of the 16th. Got a couple of open trades, so that kind of messes with the cash balance a little bit. But those right now are kind of, they're in the middle of working themselves out. So nothing's too high or too low right now. But looking at that, going, okay, we've had, we've got 2 more weeks here in July. So we've had just about 8 or 9 weeks, and in that period we have returned almost 50% net.
Okay.
Or at 50% net, which comes out to almost 6% per week.
Yeah, as you can see right there.
So that you can see very quickly, and all I was doing with that was I was pretending as if I had just started. I didn't have any education in this, and I was just following the strategy 2 alerts that you sent out, and I didn't even catch all of them.
Yeah, so you were basically just taking the text alerts that go out to premium members, and then the follow-on email alerts explaining the rest of the trade for strategy.
Right.
Okay.
And so for somebody who might be interested in looking at ATTS, and maybe they're not totally sure about this, or maybe they do have a small account and they're not sure that it'll work for them. This sort of thing is, I was taking text alerts, and all you have to know to do that is to be able to enter the order. And some of those orders are a little bit complex for strategy 2. Strategy 1 is very straightforward though. Yeah. And strategy 1's also been doing very well. But this just shows you how quickly it can make a difference in even a small account if you just follow along. This could be paper trading for somebody who's not ready to risk real money, but it's an easy way to get started and potentially earn while you're learning the system.
Yeah. And so so basically, let me understand. I'll ask one more question, Brandon. What you did was basically you started with a small amount, and then you basically did your best to catch every text alert that we sent out, and then the follow-on, and then you set up the trades to mimic exactly what the text alert and the email alert said to do.
Right. Now, there were a couple of times, like I said, I missed a couple because I was driving when the alert went out, and by the time I got around to actually putting the order in, the stock had moved and I didn't get the fill. And
Yeah.
that, there's nothing wrong with that. That happens. But I did
Yeah.
try to take every one. And there were one or two where, the butterflies were kind of a new thing. So we were,
Sure.
that my entries and exits weren't quite the same as yours. So that made a little bit of a difference. But overall, we're hitting that, 5.8% every week on average.
Cool. And so have you done the extensions out to the end of December? If you do continue making the, approximately 5% per week, how much your account will have grown to?
I have them. I'd have to open up the spreadsheet to look at that.
Okay. Well, we don't need to do that now. So, but no, thanks. It makes me really proud because one thing I know, you're saving for college for my for my grandson and granddaughter, which is very important. And so, you can use this kind of strategy to basically just compound your account on a regular basis, a weekly basis. You can actually extend it and do it for a monthly basis too. And believe me, if you have 14 or 15 years to compound on a monthly basis, somewhere between 5 and 10%, you will not have to worry about your grandchildren or your children having student loans. So thanks, Brandon.
I just looked at it real quick. If you started from middle of the year and you had half a year's worth of compounding at this rate, starting with that $2,600.
Yeah. Yeah. Where'd you go?
I'm here.
Oh.
Did you get that number?
No.
So over 26 weeks, if you were able to hit that 5.86%, you end up at the end of the year with $12,000.
Okay, so
26.
So awesome.
Is, very, very affordable. And for a small account, especially college accounts, they have the Coverdell Savings Account, which is like a educational IRA.
Right.
And it's worth looking into. So
cool. I appreciate that. And so, hey, strategy 2, that's what we're talking about. We also got into earnings seasons. Last month, our last earnings season, we did a little bit over $4,000, and we're starting to get things lined up. Utilizing, we'll be either using just straight spread, iron condor spreads, or butterfly spreads. Butterflies offer the potential for the biggest payback, but they have to settle in close to where the middle of the butterfly body is. We did the Netflix trade today, this week. We lost $84. Our upside potential on that particular trade was a little bit over $900 if it settled out right on the nose. IBM, what I did with IBM, because it was a little bit less volatile, I actually bought the butterfly that expires next week. I want to give it time to move around and come back to the middle of the body of the butterfly. Microsoft, we didn't do a trade because it shaped up the and that's one of the things that that I do is I basically assess whether the options provide a good basically foundation to do this strategy. Microsoft, it was no bueno, and so we did no trade on Microsoft. Coming up next week, and see it's a busy week, and so. With that being the case, and the other thing that we've been doing for our premium members, and I am really pleased with this, Brandon, is every weekend we come out with a game plan. Here's our game plan, potentials for the week, and I send out this little table that says, okay, I want to trade LABU. Here's my entry. Here's my stop. Here's my targets. And this was filled on Twilio, and I actually sold half the position on LABU for a nice little profit of $377. We still hold the rest of it. We exited half the position on Twilio, 502. This week's session, I sent out LABU to replenish and come up with a full plate here, or a full position size. And we're waiting for that to be taken out at about 48.25 or 48.50 level. We also bought Boeing with the anticipation of an earnings run. We bought Boeing at 360.50 We only bought 55 shares, threw in the stop loss, and the stop loss was only going to be 3%. And right now, as you're aware, Boeing actually gapped up this morning and has run up high close to our first target, which is we're going to do a 5% target, which is at about 378, somewhere between 378 and 378.53. That's our target for that. And kind of one of the interesting stories, Brandon, and I'll share with everybody, is one of the members who got the alerts, and he entered, he parallel traded with us and entered the trade, and he was sitting there going to himself, he goes, no way in the world is price action going to pull back to these levels. And so he was doing a bunch of other stuff, that's what's nice about these weekly game plans. He was doing a bunch of other stuff, and his computer went ding, and he was filled in a position, and he had his backup orders in place for the stop loss and the profit target. And so he goes, it did it. And so what our plan for the week, our game plan for the week allow you to do is just basically review it on the weekend. If you want to parallel trade with us, put in the orders, and then just stand by, and we'll coach you through how to do that. So if you want to join us in how to do that, I have a webinar special. I do this on a continuous basis, and what we're offering is 20% off our regular price if you do a quarterly membership. So in regular monthly is $124.99. You can say, hey, I want to save 20%, go with a quarterly membership, $299.99 for the quarter, and you just go here, this place here, and you can get in and do that. So NASDAQ, here's what we're looking at. This is the time of year we're in. Normally NASDAQ kind of pulls back early in July and then rebounds going into the end of the year. And Russell does something similar to that, pulls back going into the, July to the first part of August, bounces up again. Russell, here's a little secret I'm going to share with everybody. The Russell tends to move further during the Christmas or end of year rally than the other indexes. So while the Russell has been the lagger for the year so far, we'll anticipate the Russell potentially catching up or doing a bigger run towards the end of the year, especially if the Fed lowers the interest rate. So, hey, coming up, future presentations, August 3rd, the Bay Area Moneymakers monthly webinar. And then the Honolulu IBD meeting on August 6th, we'll be talking about the refinements to the Wilborn 8-day EMA trigger. It was great. I got to see Mark at this meeting last week. It was fantastic. And one of the organizers, when we walked in the door, he says, Dennis, I'm glad you're here. Hey, I'm using the Wilborn 8-day EMA trigger, and I'm doing really, really great with it. I'm waiting for him to send me his spreadsheet, because he's basically saying he's doing better than 60% per year, which is better than I'm doing. So I got to see make sure I retweak my system, make sure that I'm doing it the Wilborn method the right way. And then, of course, we have our premium Wednesday night training session. And again, from our team to your team, we want to thank you for joining us today. This is my son, Brandon, lives in Boise, Idaho. Here I am in Hawaii. And there's my lovely wife, Michelle, and then Brandon and his lovely wife, Sharon, and our 2 grandkids, Alani down here and David here. So we're working this and keeping this as a family business and growing. And I encourage you, 1, keep growing the egg, trade wisely, trade profitably. You can reach us here. And if you're a premium member, we will kick off the premium session at the top of the hour. Brandon, anything else you want to add, son?
Not right now.
And I want to say thank you for joining me. Thank you for sharing. And please continue to track how you're doing with the strategy 2, strategic compounding, because people need to know that you can in fact take a small account and grow it into a large account. And especially young people on a fixed income, people who have lost their nest egg, it's a possibility. So until next week, aloha, trade well and prosper. Have a great weekend. And as we say here in Hawaii, mahalo and God bless everybody. We'll see you. Bye-bye.